Hello and welcome to another Uncomplication. I'm Ryan. I think I've got some good stuff for you today. I've been out for the last month or so taking a break from crypto like I did last summer. It's been really nice to, I'm still trying to figure out this whole YouTube thing, but I do keep coming back because I enjoy it. I enjoy the connections I make with a lot of you. I know that I've been kind of living my personal story publicly here on YouTube, and I hope it's been helpful for some of you. I'm in a really good place. I'm in such a good place, so much better than a year ago. When I kind of got popular on YouTube was right when I had been fired from my own company, was in this whole crypto thing, was addicted. It was just such a crazy place and time, and I've done so much to get to the root of my issues. And some people make fun of me and say this is a therapy channel. That's fine. I just think that when we get up, we go out in the world, or we get on YouTube or one of these other places and we pretend like we've got all of our shit together, when really, in my experience, no one knows what the fuck is going on. We're all just trying our best. And so this is a place where I come and continue to try my best. So one of the things I want to say up front is that the best way I've found to monetize YouTube for me is to continue to have these uncomplication sessions with you. So I've now talked with over a dozen of you audience members about your projects, your businesses, what you've got going. And I think my background and experience in being an entrepreneur and a tech company, as well as just my overall approach to things, has helped a lot of you uncomplicate and find a path forward. So check out the link in the description if you want to set time with me. We do an hour of digging into who you are, what you got going, and we look for ways to uncomplicate it. So with that said, I'm going to jump in. This is going to be a crypto video just because it's been a little while. I have a few thoughts that I wanted to share. So I'm going to start off just taking a look at the DJI, the Dow Jones Industrial Average, the stock market. We've heard a lot of talk about a big recession coming, so I think it's important to just keep an eye on this big zoomed out picture. There have been 8 weeks now, if I zoom in here, 8 weeks of positive growth in the DJI, and that's after we put in an all-time high, came all the way back down, and back tested our previous all-time high set before the COVID crash in February of 2020. And we've had 8 solid weeks of growth, but we are also coming up against this imaginary line here, this downward trend line, where previously we've had some little relief rallies back up, and we were rejected off that trend line. And here we're just kind of breaking through it. And trend lines are kind of silly. I can draw this any which way to make my case. I can say that we are just now coming up against it, or that we've already gone through it. It's just kind of pointing out that we are in a moment where we'll see whether this breaks out or breaks down. But I'm looking at this, I'm just thinking to myself, all right, so we had, coming out of COVID, almost 100% growth in those assets that were all scooped up at these discount prices when COVID was freaking everybody out into selling just about everything. And then the big players have been taking profit, and we see a direction, a change in the upward trajectory. I mean, this looks like a bubble. This looks like an inflection point. And if I go back in time here, and keeping in mind, I'm not some like market expert. This is really just, me noodling through, like, what can I see? If I look at this moment, this is in 2008, huge crash in 2008. Similarly, we had this kind of dissipative event, and then we had a big rebound, and then we had a huge crash. And so this, let's see if we can kind of figure out where this was primed, at least in the way that I think about it. I think that's probably coming from, here's the 2000.com bubble kind of bursting. And so similarly, we had put in an all-time high, come all the way back, and back tested that previous all-time high, came back up, and here's that same sort of line of resistance, before we kind of dropped off the cliff all the way back down. This was a bad moment in 2008. I mean, this was 50% 50% crash in the stock market. And so here we are again in a very similar looking place. And if we were to go down 50% from this all-time high, you know, this would be getting all the way back down. Holy cow, 50%. Yeah, that's that bottom of this previous COVID crash. So I don't know. This is above my pay grade to speculate too much, but I'm just keeping an eye on this because I think if this really drops off a cliff, we are going to see a drop in crypto. We're going to see all kinds of panic and pandemonium. And I don't know, that's when people are buying. I'm gonna talk about a whole strategy based on the fear and greed index in a little bit, which I think is really interesting and helpful. But anyway, that's just kind of my first macro picture to take a look at. Let's take a look at Bitcoin. Let's look at the BLX. Again, starting zoomed out. When in doubt, zoom out. I still see an asset that has just been cruising up and to the right. I always take a look at or point out that on a logarithmic scale, looking at this logarithmic regression, contrary to what Michael Saylors of the world might want us to believe, I do see us eventually tapering out. Not to say that we won't have significantly higher values for trading Bitcoin, but I think that there is an upper limit. And if I were to continue this logarithmic regression into the next cycle, this is just very roughly drawn in here, but we're looking at getting into the $200,000 prices next cycle. And I think that is also consistent with the notion, let me turn off the logarithmic, that last time around, we went from this, this is backwards. Hold on a sec. Let's see. If we just do a fib retracement from the all-time high in 2017, 2018 to that bear market floor, I just want to point out that this market cycle, we got into almost an exact 4.23 Fibonacci extension. That, again, kind of coincides with the notion that a lot of this is now being traded by algorithms, high speed, everyone's sort of like fish swimming together. It's just crazy, uncanny how we very perfectly, kind of fulfilled that previous all-time high to the bear market floor in 2018. And so I'm just saying, if we looked at all-time high that was set in November of 2021, and we come down, I'm going to actually go a little bit lower. I'm going to go down to about 16,000. And that's just to say that in this next cycle, this is kind of coinciding with that logarithmic channel that we could be getting up into, $200,000, $230,000 if we were to pay off this potentiality of this narrative that gets repeated. So, if we are in here and we're kind of bouncing along and we're kind of waiting for this next narrative change, I think that there's going to be a lot more wizenness in the market. A lot of people are going to be wise to the games that are being played, but you can't stop FOMO. It is powerful. Fear and greed are undefeated. And I think that there will be enough of a story in 2024, 2025 to drive Bitcoin to all-time highs in the hundreds of thousands to 200,000s. So that's my long-term outlook. I'm going to talk about a strategy that kind of gets you potentially, or not you, just in general, a strategy that might help dollar cost average in and out in an interesting way. So I'll talk about that here in a second. But the next thing I want to look at is more short-term. If we jump into Bitcoin and what it's doing right now, kind of consistent with the market that we just looked at, the Dow Jones, we've had several weeks of this rebound. These are, it's not all positive, but it's about the same time frame. 1, 2, 3, 4, 5, 6, 7, 8. So coinciding with that rebound in the DJI, we've had this rebound in Bitcoin. And so I think these things are really tied together. And similarly, we are coming up against a resistance, imaginary line of resistance that could make things interesting for us here in Bitcoin. The other thing that I like to check in on is, let's take a look at, on the weekly here, let's look at the 200 EMA. So the exponential moving average, 200 week exponential moving average. Let's look at this on the BLX. This was something that I thought was kind of interesting. So we are currently below the 200 EMA, and that doesn't happen very often. It definitely happens on the backside of our all-time highs. It happened during the big COVID crash, which might have been a little bit of an anomaly. But take a look at when prices are actually below this blue 200 EMA line, as they have been. That was the bear market floor in 2018. That was the bear market floor in 2015. And we kind of always come back, at least in these last couple cycles, and had another break below the 200 EMA. So if we look at where we are presently, we are below the 200 EMA for the first time in this whole cycle. And we're coming back up to test it. Are we going to stay below it for much longer? Last time we were below the 200 EMA for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18 weeks. And so far we've only been below it for 1, 2, 3, 4, 5, 6, 7 weeks. So I think that what this means to me is that while we will see this EMA eventually kind of turn around and come back down, so it's a little bit easier to get on top of it, I imagine that we're going to kind of hang out below this 200 EMA a little bit longer. I bet we kind of have a breakout above it, come back down. I think we'll go below it one more time before we kind of pop out. That's just based on what we've done in the past, but I think it is useful. I mean, 200 EMA, that's a big moving average, and we are below that. We're actually in a zone that we only see in these bear market cycles. And just something to keep an eye on. So the other thing that I wanted to talk about, I feel like, so let's get even shorter term now. Let's look at sort of day to day. If you're trading Bitcoin on a more kind of daily basis, let's get even more zoomed in. The thing that I've been looking at the most lately, when I really want to guess where prices are headed, is the liquidation map from Kingfisher. And so this is something that Cello in the Crypto Garden turned me on to. I think this is just freaking brilliant. I mean, I've talked on this channel a bunch about how the market makers move the market, how the kind of large scale Wyckoff cycles move the market. On a day-to-day basis, I think this is the story, is that here's our current price as of this morning, 24,000. And if you look at where the liquidations are, so where people will be stopped out or the leverage is residing, that if price goes to these levels, people will be liquidated. The exchanges will make money, they will recoup liquidity, the game can go on being played. We still have a lot of liquidity below the current price. There are places where people have perhaps shorts that were open or other zones of liquidity higher up. In this $36,000 range, there's a bit of liquidity hanging out. But just proportionally, there's a lot more liquidity hanging out below the current price than above. And so as I look here, 24,000, 22, 2018 even down to 16. This is where I think we're going to next, because this is just a game that keeps getting played over and over, and wherever the liquidity is where the market goes to make that money and to free up the liquidity so that the market makers can continue to provide the liquidity to the market. So if I'm looking at this and I'm doing a shorter term prediction, I'm looking at these levels where is 16 I'm just going to draw a line at 16,000 ish. So I think that we're going to see maybe even as the DJI turns around and we have kind of a larger macro narrative that's driving the fear, I would anticipate that in the next couple weeks or even days that we start to see a return to some of these lower prices to reclaim that liquidity before we bounce up and do something different, more interesting. If we turn back on the EMA, this is consistent with that same kind of view. So all of these things in my mind kind of go together, and that's just sort of how I'm looking at it. Okay, the other thing that I wanted to share today was this trading strategy based on the Fear and Greed Index. That's another thing that I like to check in with when I'm coming back to crypto, just see where we are. So it's really interesting to me that yesterday we were actually back up to neutral after being in extreme fear for a long time. If I look at just this history, just look at the 1 year, we've been in this extreme fear since May of 2022, basically. I mean, we kind of had a little bit of a march back out starting in June and July, but this has been hanging out in this fear zone for a while. And so I want to share with you this. This is kind of cool. Let me turn off the EMAs. And let me show you a new indicator that I'm in love with. This is just the Crypto Fear and Greed Index as an indicator. Let's look at it on the daily. I think that's how it likes to be looked at. I'm still trying to find a way to get the Crypto Fear and Greed Index as a chart up in this main view. The best I found so far is just this indicator. If any of you know of a way to get that data into TradingView, mention that in the comments. I would love to find a little bit cleaner way to look at this. But one of the first things I do, just because I'm a spaz, is I like to go and make this just a darker, more opaque white line. Okay, so here is the basic idea, and I want to give credit where credit's due. I did an Uncomplication session with this really interesting neurosurgeon from Canada. It was pretty cool. He was talking about a trading strategy that he and his daughters were employing. And it's something I'd thought about before, and I think Ben Cowan has something that's really similar based on his risk metric. But here's the basic idea. So here's the Crypto Fear and Greed. The idea is that you can come up with a unit value. Let's just say a unit equals, in this case, we'll say $10. Oops, $10. And our frequency will be a day. This could be a week, this could be a month, but we're going to say $10 a day. And if the Fear and Greed Index on a given day is in extreme fear, we're going to buy 2 units. Let me duplicate this. If it is in fear, we'll buy 1 unit, so just $10 purchase. If it's in neutral, we're not going to do anything. If we are in greed, we are going to sell 1 unit that day, whatever the price is. See, this is a way of dollar cost averaging, DCAing in and out. Because a lot of times people just say, yeah, set up a buy for every week, you buy X amount of crypto. And that's great, but it also doesn't really help you take profit, which is something that's very hard to do. And see, that's the whole psychology at play here. When we're in these areas of fear, and from a Wyckofian view, the market makers, the big holders, they're trying to scare people away at the best times to buy so that they can buy. And when it's the best time to sell in these moments where it seems like everything's going to the moon and the narrative says, oh, it's going to 220 by December, that's the hardest time to sell, but it's the best time to sell. So the idea behind a strategy like this is that perhaps it can remove you from your own emotion because you're just trading based on this one metric. You're not really looking at price. You're not really even looking at these big structures that we were just doing. You're dollar cost averaging in when it's the most fearful, and you're selling the most when it's the most greedy. There we go. So yeah, this is something that I've just been kind of thinking about. I was sort of looking back and saying, all right, if we had done this sooner, how would this have worked out? And it was interesting to me that, it's not perfect, and it really does require kind of that robotic sentiment that you're not going to listen to the hype and the narrative. For example, this range right here would have been very difficult to be selling, 2 units if you believe that there's a huge uptrend coming. And even here, look, the most selling would have happened in this range before we even got up to the all-time highs. So you would have been selling and selling and selling everything that you had accumulated back here, well before we got to the highest prices. So even if I just kind of average this, you would have missed out on 80% more gains, as opposed to holding it, and trying to time it to sell at the top. That's what everyone tries to do, but it's so freaking hard because when you're up here and you think it's going higher, you're not selling, and then you're, oh crap, most people sell when things have turned around and they catch, less than the top. Here was the all-time high initially in 2021, and then a lot of people, held on and then kind of panic sold down here. So they were already getting back into this lower average. So anyway, that's just a way of looking at it. This is not financial advice. You can do your own thinking, but with this very simple chart, it is an interesting prospect to say, you know what, my crypto trading is not going to be based on technical analysis and all of this macro level, blah, blah, blah. It's really just going to come in and see, are people fearful? All right, it's a great time to buy from them. Are people greedy? It's a great time to sell to them. And so that's something that I'm going to be kind of playing with. And I offer it to you for consideration. Let's see, was there anything else that I wanted to talk about? I think that's kind of it. That's a pretty long video. Again, if you want to do an Uncomplication session with me, I would love to spend some time one-on-one with you, talking about you, your life, your projects, your company. Anything that you got going on. I think that I've experienced a lot. I'm happy to share. I have a good method for bringing some strategic thinking in. And so reach out to me. Find that link in the description, and let's set up some time together and see what we can do together. The Crypto Garden is also up and running. We're still in there having conversations on a daily basis about a lot of this stuff. So you can join that community and get a little bit more personal in the conversation. It's still, in my mind, one of the best places to go to talk with really smart people that are digging behind the headlines, going down the rabbit hole, and like-minded people with a real interest in personal empowerment and freedom. And I think that's what crypto represents at its best. So I'll leave it there. Thank you all for tuning in. Until next time, cheers.